Welcome to tonight's live webinar. Tonight we're going to be looking at the Indian stock market, doing some analysis. For those of you who haven't seen it yet, I want to first of all introduce you to our scanning platform, which is only about a week away from being launched as a beta product for everybody to use. And what we have here is a platform where we use technical analysis and the strategies that we teach in our classes to help students find and to help traders find the best stocks in the market without spending hours and hours manually scanning them. Here we have several different ways to scan. Since we're talking about India tonight, we'll go to India, and then we select the exchange, either the National Stock Exchange or the Bombay Stock Exchange, for example. And let's say we want to pick the National Stock Exchange. And let's say we want to find stocks that have the most relative strength. That means stocks that have broken out of a base of consolidation and are showing relative strength to the broad market. Then what we simply do is we hit the button that says Scan Now, and we get a list of all the stocks that meet our criteria. So we've taken thousands of stocks and we've narrowed it down to about 100 of them that are the strongest stocks in the market. We can also do a scan for what's called a pullback. This is a pullback scan, so this is a stock that's trending higher that pulls back to support of a trend line or a moving average. Notice here, we just with the click of a mouse, we get a list of about 15 stocks that are on a pullback, which would be potential buy entries. And then if we want a trend reversal, that's stocks that have been trending lower for a long period of time but start to reverse and set a higher high and higher low. And we can do the trend reversal scan as well. And we see many stocks actually are right now reversing because the Indian market has been in a downtrend for quite a while. So there's a lot of stocks that are trying to pop their head up, and this gives you early notice. You can select the price range and the volume range, to filter out low price stocks or low liquidity stocks, for example. And for those of you that are more advanced traders, you can even do your own scanning. If you don't want to use our preset scans, you can do scans for stocks that are above a moving average. Let's say a stock you want above 10% above the 20-period simple moving average. You can do moving average scans. You can do stocks at new highs. You can pick the percentage you want the stock to be above or below the 52-week high, and even relative strength to the broad market. So these are a lot of different ways you can use the platform. When the platform is released, we'll be allowing everybody to use it for free in the beginning to test it out and see how you like it. And then it will be available as a monthly subscription. And included with the subscription for the software, you will also get access to our live daily webinars where we do analysis of the stocks based on using the software. So you learn how to use the software at the same time. There's also charts as well. If you click on the ticker symbol, you get a chart. The charts are currently being worked on. That's not ready yet, but they're going to look like your standard candlestick charts with the ability to do annotations as well. So we're really excited about this because this is something that we found that in India and in other parts of Asia, this type of sophisticated technical scanning platform is normally only available to institutional traders such as banks, mutual funds, and hedge funds, and it's normally quite expensive. This is the first time a product like this will be made available to the average, retail investor, retail trader in India, and there's nothing else like it that we've found out there in the market for India. So we're real excited about that. So if you're interested in this software and you'd like to be a beta tester of it when it's available, please type in a chat box and let us know, and we'll be sure to get you set up when it's available in about a week or so. Okay, so tonight we're going to be looking at some stocks that actually came up from our scans and when we were doing our research earlier, and we'll show you some of these patterns that we like. One of them that came up, which also came up on our interactive broker scan as well, is PMPP. PMPP, it's Paramount Print Packaging. This came up because it was actually a play that was breaking out of consolidation. If you see here, you can draw the horizontal line, and notice the stock for each one of these bars is 1 day of price action. So notice the stock has been trading sideways for actually several months. And today it just broke out above its horizontal consolidation. It's above its 50-day moving average, which just started to form because this is an IPO. It's a new stock that hasn't been trading that long. And we like those trading IPOs because they have a lot of upside potential when momentum gets behind them. There's not much overhead resistance. Now notice here that the volume has been light while the stock is consolidating. But then today when the stock broke out, the volume increased. Traded its highest volume it's traded in more than a month. That's good. That's what we want to see. Now the stock's going to run into resistance up here. The prior swing high from back in May, around 31.40. But what we're looking at now, if you missed this initial entry, we like it for a pullback. If the stock pulls back to the breakout level, around 25 to 26, right in this range here, it doesn't have to be exactly this line, but it's near this pullback. If tomorrow we get a pullback to near this breakout, it's a very low risk buy entry because the prior level of resistance always acts as the new support after the resistance is broken. So this may be one you want to put on your watch list for a potential pullback. It's a PMPP for a pullback to the breakout line. That's a nice entry. It's a short-term play. We'd be looking at the first stop would be the resistance up here. And of course you can put a protective stop loss just below the 20-period exponential moving average, this blue line you see. Let's look at another stock. Okay, what we've got here is SVI is the ticker symbol. This stock also, just like the last one, came up from our DragonCharts scan as a stock that is broken out of consolidation. And you can see the similarity here with the chart pattern. You can draw the horizontal line, and you can notice here that we connect the most anchor points of this horizontal line. 1, 2, 3, 4, 5, like 6 times the stock tried to break out above resistance. It tried here and failed, tried here and failed, tried here and failed. But today, the stock actually followed through, and it broke out. And it really had a big breakout. It went up about 10 points, which is about 20% move today. And you see the big candle there. And most importantly, look at the volume. You can see that the stock wasn't trading much volume before, but today it traded 350,000 shares, a huge volume spike, which is confirming that the institutional interest behind it. And if we go back further and look at the chart, we can notice that it also broke out above its prior swing high back here. And now it's got its 52-week high right here to contend with. And if the stock gets up to this 52-week high, what we'd like to see then is a sideways consolidation, where the stock would trade in a sideways range and form kind of a cup and handle pattern. And then a breakout above to a new high would be very bullish. We'd like to see that. Here again, the stock is too far extended based on today's move to buy it at this current level. But if we see a pullback, it's unlikely we'll see a pullback to the breakout level. In fact, you wouldn't want to see that. That'd be too much of a pullback. But if we get about a 50% retracement of today's move, so if the stock pulls back to about 57 to 58, right around here, that would be a low-risk entry. Not as good, of course, as buying the breakout, but it'd be a low-risk entry. Our scanning software helps you find these stocks before they break out, by the way, through using the consolidation patterns. Next is TTK Healthcare. This stock we pointed out in a recent webinar actually as a stock that to keep on your list for a breakout of consolidation, and that's exactly what it did. We noticed actually yesterday it broke out, and today it built on that breakout. And notice how the volume is increasing. That's what we want to see, is increasing volume. Now in this case, when we get a stock that's moved so far like this, again, we're not going to probably see a pullback to the breakout level because it's too far and we don't really want to see a pullback there. But we can look for the formation of what's called a bull flag, where the stock actually will descend lower very slightly off the highs. We'd want to see a pattern looking kind of like this. So we'd have the this is a bull flag. We would have, this is the upward candles right here, the 2 up days, and now we'd want to see the stock price drift lower for, let's say, another week or so. What that does, this bull flag, it enables the moving averages, such as the 20-period moving average, to rise up and provide support to the price of the stock, which enables the stock to move higher. So if you get a bull flag, then you'd want to buy the first breakout above the upper channel of the bull flag. We can also use Fibonacci as well. Fibonacci is a tool that works really well for determining how far a stock will pull back. For Fibonacci, we just we draw Fibonacci lines from the high of the breakout to the low, and we can see where the retracement levels are. A 38.2% retracement, for example, takes us down to around 530. 50% retracement is right just above the 500 level. So that's going to be, what I mentioned earlier, 38 to 50% pullback is a low risk entry if you see it. So even when a stock has moved too far ahead already, it doesn't mean that we can't get in. We just have to wait for the correct pullback to come along. And let's take a look at PLHH. Here we have a stock that came up on our trend reversal scan. On our trend reversal scan on the software, we actually saw that this one has been in a lengthy downtrend. You can see here the downtrend we can draw very cleanly. It's been in a downtrend since August of 2010, and you can see the anchor points here 4 times. Now what happened though was we actually had the stock started to form a higher low. It moved back above its 50-day moving average not too long ago and started to hold above its 50-day moving average. And as it held above the 50-day moving average, the 20-period moving average is rising up, crossing up through the 50-day, which is a bullish sign. And now today, the stock has confirmed the breakout of the downtrend line. Again, look how the volume has spiked substantially higher, much higher than average volume, and the stock clearly moved and set a higher high. So now we've got one higher high and we've got a higher low. So this is too early to confirm the reversal of the downtrend, but it is an early warning sign that the downtrend may be reversing. And this is something that we want to consider as a potential buy entry if it pulls back to test support of this breakout level, or if it moves sideways and then breaks out above this 200-day moving average. We like the stocks right now that are reversing their downtrends, because if we take a look at the Nifty, for example, one of the main indexes in India, we'll see that the index has been in a downtrend and hasn't really broken it yet. So when we see stocks that are reversing their downtrends ahead of the broad market, ahead of the main stock market index, that's a good sign of relative strength, and these will be leading stocks when the market stabilizes and eventually breaks out. So let's take a look. We'll conclude by taking a look at the Nifty. On the NSE, the Nifty 50. Okay, you can see that the Nifty 50 has been in a downtrend, and it's been in a downtrend since October of 2010, and then it's been very choppy actually for the past several months. We can see the downtrend line right here, clearly defined downtrend. Recently we pointed out that it tried to break out, but the convergence of the 200-day moving average with the downtrend line was too powerful, couldn't get above it. But we do like that the index is holding here near its high. It had a shakeout day a couple days ago on the open, but it closed strong. So keep an eye on the Nifty. If it gets above the 5750 level, that's going to confirm a breakout above the downtrend line and the 200-day moving average, and we'll see a lot of bullish setups in the Indian stock market. So join us every day for our daily webinars, and we'll keep an eye on this and point out the best setups.